What is going on, everyone? Welcome back to another video. So as you can see from the title of this video, today I'm going to show you how to frame high probability low risk setups using the Orderflow X SMC strategy. So it's very simple. Now before we get started, really quickly, as some of you may already have known, but if you don't know, I have now launched my free introductory Orderflow ebook. So you can get access to this ebook completely for free by signing up and go down to the link down below, and you can get the ebook emailed to you completely for free. And this is going to give you a very good explanation of what order flow is, the basics of order flow, etc. So I really advise you to take a look into that. So let's get started. I'm going to first of all speak about framing the setup from a smart money perspective. We always look at the price action first, and then we use the order flow footprints to confirm our point of interest. So in this example today, we're going to be looking at USD JPY. So I'm going to remove everything to the side here and just take a look at price action in general. So we take a look at the longer term trend on USD JPY, and yes, we understand that we are currently going to be looking for shorts. Okay, we understand that we are going to be looking for shorts, but as I'm only intraday trading right here, I'm only looking for 2 to 3, or I'm only looking for what? Usually only going to be looking for around 80 pips, and we have a very big range right here. So if we take a look at market structure really quickly, we can see that price makes a trend, okay, rallies and pulls back, makes another drop, pulls back. This doesn't even count because it didn't break the structure. So this whole drop right here, okay, and now we're looking for a pullback. But where do we look for the pullback to? Sorry, apologies, I don't know why my drawing's acting up. So since this was the most recent swing low and this was the pullback, and now this is the most recent one, okay, we look from this high to this low, and we can see that currently we are playing around the equilibrium. So we are playing around the 50%. But what we want to look for is shorts from the 78.6, 88.6, etc. So I need to see price come back up into here before I look for any more shorts. Also makes sense that we have imbalances in here, and this is going to be our nice supply that we look to sell from. So that is quickly my bias on USD JPY. So now when I drop to the lower time frame, I'm framing setups, okay, to the buy side in order to sell from here. So from here to here is my margin to look for sells, to look for buys, apologies. So when I look at the chart, and when I look at price action here, what do I see? I see that we made low, pulled back, we formed new lower low, but then we broke structure. This is a change of character here. So we got our change of character where we cleared this low and broke this most recent high. So broke the most recent lower high. And now what we can see is we started pulling back. We started pulling back right here. And there's multiple different points of interest that we could have gotten into here. So when we look at price action right here, and I'm going to use the replay to help us. When we look, and after 4 candles down, this confirms that this is the high now. So now I'm going to be looking for buys. We got the change of character, etc. Everything is looking good. Now we start looking for buys. So 2 things that I have to look at. Look at the magnetic areas. Where are the magnetic areas in the market right now? Imbalances. Very big thing for me. Imbalances. Big imbalance, and then the big imbalance. Then I mark out my potential points of interest. Potential points of interest, 1. Okay. 2. Okay. That. And then 3. Most likely we can refine the zone a bit more, but we're just going to mark out the whole zone. Okay. And then these are going to be our inefficiencies. So this is the IPA. So these are going to be our zones in our trend. So first and foremost, do we look for this one? Straight away, I'm not interested in looking for this zone. I'm not looking to buy from here. Why? Because we are above the 50%. We are not in discounted pricing. I'm looking for zones within discounted areas, okay? Below the 50. I need to see zones below the 50. So around here, these are the zones that I'm going to be looking for buys from. So this one's disqualified. It's also disqualified because there's an inefficient price action right below it. So look what price does. It goes through it, okay? Obviously goes through it. This zone was disqualified. We also have an efficient price action right here that I'd like to get filled in. We take a look right here at the rest right here, and I can see that there's no inefficient price action. This was healthy corrective price to the upside. So this is good. So this zone right here makes the most sense for me to look for buys from. So now what I do is I wait for price to approach the zone. I don't have a buy limit, nothing. I'm just waiting for price to approach this zone. And boom, price taps into my zone. And now this is when I start pulling up my order flow as we tap into the zone. Now what I need to see is confirmation candles. I don't enter zones. I don't enter straight away from zones anymore. I wait for confirmation candles. I wait for price to make a couple of bullish candles in order to let me know that this candle is indeed being respected. That this demand is indeed being respected. So what we do now is we end up pulling up the order for footprint. So now as I pull up the footprints chart right here, okay, what can we see? This candle right here is as we tap into the zone. Okay, so if I remove it here really quickly, this is as we tap into the zone. As we tap into the zone, this is the candle. So when I bring back the footprints chart right here real quick, what can we see? We start looking at the delta. We start looking at potential signs that we are going to start now making a move to the downside. So one of the most important things for me is as we approach the zone, as we tap into the zone, and as we move away from the zone. This is very, very important. So as we approach the zone, look what we have. Very, very bullish candle. We have bearish imbalances at the top and bearish and negative imbalances at the bottom. Selling imbalances, my bad. Keep getting mixed up. So selling imbalances here. Okay, identifying that the sellers are selling aggressively within this candle. But the most important thing for me is look at the delta. Look at the effort in comparison to the result. Minus 693.11, minus 804. Extreme selling pressure really coming in here. Extreme selling pressure coming into here as this candle formed. But this candle still closed bullish. So this sign shows me that we have absorption right here. This zone, okay, now we can see that there's a lot of transactions occurring here. A lot of trading on both sides. We understand that the market, okay, trades in a two-way price auction. So there's going to be sellers and buyers. There's going to be sellers and buyers, bids being hit, offers being hit. And also there's going to be passive buyers and passive sellers being triggered into the markets. So as we approach this zone, okay, as we approached our institutional candle, and also, by the way, if you're wondering why it looks like we are looking for sells, because 6J is actually negatively correlated with USD JPY. So just make sure you understand that in the footprint chart, we look for sells, but in USD JPY, we're actually looking for buys. So just if you're confused about that. And what you can also make life simpler for yourself is you can inverse the scale. So here I can invert the scale, and this can kind of help me a small bit understand what is going on right here. Okay, but then you'll also have to change the colors. So we can invert the scale right here. We can look at the footprint chart once again. Okay, so what do I see right here? I see that we clearly have signs of absorption. Next candle comes in, once again bullish, but not really it's not really going anywhere, right? We haven't even broken above the previous candle's high. But we wait. There's no confirmation here yet that we should be looking for sells. This is as we just tap in. This is as we are approaching. This is as we tap into the zone, and then next candle, boom. This is the interesting candle for me. Minus 176, minus 230, 67. Still, it's not the best looking candle, but this is my first confirmation that now we should start looking for sells. This is the first confirmation, but the delta is not weak enough. Okay, it's not weak enough yet in order for me to be looking for sells. So yes, we have a lot of selling imbalances, as you can see right here. So this is a very, very good sign that sellers are coming in aggressively now, and that the passive sellers, okay, in that zone, as you can see, now they have entered the markets. Their passive limits, their limit orders have now been triggered. Then we wait. We wait. And as you can see, price comes back up. And as you can see, 289, 296, minus 42. So potentially now it's giving us signs that, okay, this zone might not hold. This is why I wait. This zone might not hold. Potentially this zone might not hold. But here is something that is extremely, extremely important. Watch the delta. And don't watch just the delta on its own, one bar's delta on its own. Watch how the deltas transform. So from the 6 candles right here, as we approach our zone one more time, and as we, by the way, go to take the high right here before making our move down, look what happens. The delta goes from positive 298, decreases to 111.49. Then look, minus 123, minus 199, minus 299. So you see the delta right here. This is the delta shift right here. The delta shifted, and as we kept going in the candles, even though we were forming more bullish candles, and the price was going higher, okay, in the delta, we were actually weakening. The aggressive buying was weakening, and the aggressive selling was strengthening right here. So this is something that you'd never be able to know, and you'd never be able to see if it wasn't for the delta analysis right here. You wouldn't be able to see this from a normal candlestick chart. You'd think that this zone is actually not going to hold, and now we're looking for a new higher high to be created. And then you can see also the minimum delta right here. Okay, minus 42, minus 50, 167, 337, minus 349. So the minimum delta, the negative deltas are now increasing. Very, very strong sign. But I still don't look for any entries. The time where I now execute my order, and I'll show you now, is going to be here. These two candles. Why? Because I see right here, this is the sign that we always look for. I've talked about this on multiple videos. The buyers and sellers trap. Look at the top, 214. Very, very big number of buy contracts right here trapped at the top. They bought the high, and there's always people that are going to be trapped because there's going to be people that are going to sell the low and buy the high. And these are manipulated traders. And a lot of the time, these traders, once they get trapped, they get out of their position really quickly and enter in the opposite side of the market. So this is what happened. And still no confirmation yet, because minus 199, 248, 337. There's still a bit of balance. There's still aggressive buying occurring here. So it's not big confirmation for me yet. Also, another thing is 182, 15. That's good selling imbalances. Now, here is where I enter in this candle. I entered the trade after this candle printed. Why? Minus 299, 1, minus 349. Absolutely only one contract right here, as you can see. Pretty much no aggressive buying whatsoever in this candle. As you can see, strong aggressive selling, very, very strong negative delta right here. And then we also have, look, the exhaustion at the top. So single print, no interest in buying at the top right here whatsoever. And then we have the selling imbalance, selling imbalances, etc. So this is where I would have entered. Where would I have entered exactly? Wait for this candle to print. Once it closes, I enter straight away. Straight away I enter. What I could do potentially is just wait for price to pull back a small bit into the candle, potentially fill in imbalance or tap into the selling imbalance right here, and I get into the trade. What do I do now? Once I have this, we go to 60 minute, 1 hour. Look, we let price do its thing. I'm going to re-invert the scale. Like so. So you see, once this is the candle, and once I see this candle print, now I enter. I enter on this candle right here. And my entry goes here. What do I target? My stop goes below the low, or I can place it below the close right here. Decent enough stop loss. I'm just going to move everything here so you can see everything clearly. Entry, below the close. And then what do I simply aim for? I simply can aim for a 2-to-1. Just a 2-to-1. Nothing crazy. Aim for a 2-to-1. And that was hit my profit in simply a matter of 3 hours. So these type of setups are going to be high win rate setups, very, very high win rate setups, but you're going to you're not going to be really focusing on high risk to reward. So this is a different approach that you can take, and this is the way that I frame high probability, low risk setups by first of all identifying my zones, identifying my bias on my price action. Then I wait and I go to my order flow and I try to form a story. And I was able to eventually, yes, I had confirmation here, but this wasn't enough. I need a lot of confirmation, first of all, with order flow. You need to be able to have a clear story. Once I seen this, even the buyer's trap still wasn't enough because I still seen that there was buyers engaging. Look throughout here. There was positive delta, still strong positive delta, positive delta, positive delta, positive delta. But the positive delta was weakening. The min delta here was increasing in negativity. Okay. And then eventually this candle showed me that there's only one, just one. So this was the one that triggers my setup. And as you can see, after that price melted, realistically, we wouldn't have went for this whole move. I only go for 2-2-1 with this setup. So that is pretty much it for this setup. Hopefully you understand. As I said, do not forget to make sure to sign up and get the ebook down below. First link in the description. You can get the access to the ebook. To give you an introduction about order flow. As well as that, make sure that you follow me on Instagram at MomoFUFX. And with that being said, I hope you gained a lot of value from this video, and I'll catch you on the next one. Bye bye.